Hey everyone, welcome to another Mortgage Leadership Outlook on a beautiful Wednesday. Hopefully it's beautiful wherever you are. Hopefully you're safe. Everything is going great in your world, and you're dealing, with the chaos that's happening in our world and in our industry as best as you can. Is just such an unbelievable time. To say actually it's an unprecedented time is it's just we can't even say that enough. But thank you so much for joining us. We love when you join us every Wednesday at 4 o'clock East Coast time, 1 o'clock Pacific time, where we meet with the biggest and brightest minds in the mortgage business, the leaders who actually have been out there helping us guide. And today I am so blessed to have Tim Nguyen, who is the co-founder and CEO of BeSmartee. Tim, thank you so much for joining us today.
Yeah, Andrew, thanks for having us. Appreciate it very much.
So listen, I want to. So by the way, it's got a phenomenal story. So talk to us a little bit about. Just tell us if someone who's not familiar, with Tim and not familiar with BeSmartee, just give us a quick, 30, 40 seconds about who Tim is and who BeSmartee is.
Yeah, absolutely. So Tim, the personal Tim, is a father of two boys, 5 and 2. Married to a beautiful wife who actually also works here at the company as well at BeSmartee. Personal time, just love. I love playing poker, playing basketball, listening to music, playing music, and just overall, having to spend time with the family. A lot of that going around lately because of COVID, of course. The professional Tim is the co-founder and CEO of BeSmartee. We're a digital mortgage POS platform. Long skin of it is we just simply go deeper and faster into the process in the same amount of time. About 15 minutes, we put a borrower into a paid appraisal. It means application, credit, product and pricing eligibility, AUS, initial disclosures, e-signing, and even appraisal fulfillment. And that's what I obsess about when I'm not home with the kids.
Cool. So listen, and I'm going to dig into it a little bit later because listen, obviously because of COVID-19, and now actually everyone's they're doing a quick rush to digital. If they haven't already, the point of sale systems are even more important. But however, you started BeSmartee back actually, way before, we had this rush. Actually, even if I remember correctly, it was even before we saw that Super Bowl commercial that had the rocket loans where had all originators saying, "Uh-oh, this is it. It's the end of actually the originator." But then technology like you guys, has been out there to support. So kind of tell us back in 2014, and then we're going to go back into your history before, because it is phenomenal. Actually, the insight that you had before that. But tell us actually in 2014, what was the opportunity that you saw? Because at 2014, I don't think people were focused on going to the point of sale, as early as you were.
So I'm going to take you back a little bit because I was actually glad you asked this question, because you were one of the first people in the business that I shared this vision with. I don't know if you remember, this was in New York at the Shoreline Hotel. You came by to, this was at my last company. You came by and I was like, "Andrew, I want to tell you about something that I wanted to build at the time." So that was 2000, I want to say that was 2010. And we had this idea brewing of what we call BeSmartee since 2007. So 3 years later, I finally, you were one of the first people I shared it with. Couldn't get it off of the ground at the time.
I didn't understand it. I remember I was like, "Wait, but what about this AMC thing?"
But I have to thank you, because I shared it with a few other people as well, and a lot of it was like, "Well, it's not possible because of X, Y, and Z." But you were one of the few people who said, "You know what? That sounds amazing. I think you guys can do it." And you asked me some really challenging questions, helped me really kind of hone the vision down. And so I want to thank you for that. Anyways, fast forward to 2014, what it really amounted to be honest, was I exited my last company and I had all the time in the world and no more responsibilities. And my wife and I were supposed to take a year off. Ended up being a month, because after 30 days, we just got bored. And we decided to say, you know what, remember BeSmartee? We had kept the corporation going all the time. We kept the business plan going. We kept it refined. And we literally picked it up and said that it's time. Let's go ahead and do BeSmartee and jump right into it. Luckily, by then, I knew more people in the business. We had clients, we had vendors who were willing to take the ride with us immediately. And they were even willing to educate us and talk about, okay, here's how credit works. Here's how the disclosure piece works. Here's how what the new regulations coming up were. And we're able to just kind of take all that knowledge and learning and start actually writing the code and building out the software.
Wow. So I mean, it's funny. Like I for some reason, I actually I always thought it was Chicago, but you might be right. I think actually you are right because it was New York. So that's awesome. I can't believe that you remember that. That's very cool.
Why I remember, because it was the first trade show we had ever done. And I talked to our head of sales, like, how much did we spend on this place? Because it was a gorgeous place. Yeah. Right, it was the top, the very top of the shoreline there, and that's why I remember. And you were one of the first people that walked in and shared a good conversation with you.
That's awesome. So now I jump all over the place sometimes, and I'm I want to actually also remember actually that place. But so now at that time. And let's not forget about this because this is pretty substantial. So you had in-house, which was an AMC, but it was actually an AMC before appraisal independency was required. So before anyone actually ever heard of HBCC, before actually the governor of New York actually set off actually the poop storm that happened that created actually the appraiser independence that created HBCC. So in 2002, which by the way, so that's a year out of college. You graduated actually from University of California, and you start up actually in-house. How did that happen?
So I actually left college early.
Okay.
I completely stumbled upon the business, hanging out with a buddy who had graduated college maybe 4 or 5 years before me. And he's like, hey, we're just hanging out at his house. And it's like, look, I got to go do an appraisal. You want to stay here and wait, or do you want to come with me? So I'm like, I'll go with you. I'm not doing anything else here. Sat in the car. He did his thing, came out with, I think it was like a $250 check at the time. For a college kid, that was huge, right?
Yeah.
What are you going to do that? I could do that. And he's like, well, I'm actually leaving to become a loan officer to Washington Mutual. Why don't you come check out the firm? And that's how I got my start in mortgages. But back then it was, we got started in appraisals. We got into title and settlement and also notary services nationwide as well. But when HBCC kicked in, actually, it's funny because 2 years before that, or maybe a year and a half before that, New Century went under, if you remember that. That was about 2007. So before the 2008 official, crisis, we started seeing business tank 80%. Yeah. And that's when we knew we had to kind of just hone in. So we decided to focus in on appraisals. But more importantly, we started taking our appraisal management software. And we started thinking, okay, how can we use this internal software at the time that we didn't license out, start planning for a future where we start licensing that out as well. So we expanded into the appraisal management software side of the business.
Wow. And then HBCC hits, and I mean, you guys were just right place, right time, with already a mature actually thing that you just plugged in and lenders were ready to play. Well, so what was the unique thing that you guys were doing at that time that others were just trying to ramp up to do?
The AMC, I think our biggest advantage when HBCC kicked in was we actually been doing it for many years before that. Yeah. If you recall, everybody was trying to open up an AMC at the time. Yeah. So we had the experience, we had the contacts, that helped out a lot. And in fact, one thing that touched my heart dearly is when that crisis hit the first time, we had to lay off a lot of employees. But when we restarted everything, right, with HBCC, a lot of our employees came back. They quit their jobs, they left their jobs, and came back because they wanted to be together again. I thought that was phenomenal. We had great people. We knew the business. The timing was well. And then we also had a gem, which was our own internal appraisal management software. Then it was really about taking that, and then we started licensing it out to lenders and AMCs across the country. Now, the industry knows that as connections.
Yeah. So now, why do you think people came back? Because they had jobs, you fired them before, laid them off, but I mean, obviously you had something going on there. Was it your vision? Was it something about actually, just the team you had together? Like, how did that happen? How did you actually, you get everyone to say, all right, I'm quitting my job. Actually, probably a lot of them got out of the mortgage business, and you say, wait, come back. There's a great opportunity. So tell us, actually, what do you think led to the employees coming back?
That's a great question. I think number one, the people were phenomenal. They got along. One thing we always focused on was building the right culture. People that share the same core values, right? Really, one really important thing for us is that we try to differentiate between personality and culture. If someone's got a different personality, but they share the same core values as you,
Yeah,
that's totally fine. Let's mix the pot up. Let's bring in the different personalities, right? So core values, I think, is the number one thing. We had a great culture. People wanted to be together again. They also wanted to be with us, I think, because what we did the first time around, it grew really rapidly, and they wanted to be a part of a company that would grow again. And we did that. We actually grew about 5 times revenue versus the prior, pre-HBCC model.
So, and now, so when you did that, and obviously eventually, you went on and, sold the company. But was most of the people with in-house through the entire time?
In-house definitely morphed. So when we restarted that post HBCC, a lot of the old guard came in, right? The ones that quit their job to rejoin and to be a family once again. And we opened up operations in Florida. And so we had a split operation. So from there, it really evolved. The client base continued to grow. We needed bodies on both sides of the coast. Things really matured, and we were bringing in new talent. Some people stayed around, some people left. But ultimately, what I'm really happy with is the company's still there. It's still operating. From what I hear, I bump into the team every now and then at Connections, and really just happy to see them operating and making things happen in our space.
That's great. That's awesome. So listen. So going back to BeSmartee. So in 2014, when you started, so you were basically was there any other point of sale systems out there at that time?
There was some I didn't even know about. The biggest one out there was MortgageBot, right?
Oh, yeah,
they are the true founders of digital mortgage.
Yeah.
No matter what anyone tells you, they did it first. They did, I think, in 98 or 99, if I'm not mistaken. They did it a couple years after Expedia kind of exploded on the internet, right?
Yeah.
The team over there, the founders there, Scott and Sue, they did a phenomenal job. I mean, they, to this day, I think, are still probably the largest POS out there.
Wow.
A great company to look up to, but they were the true founders. We kind of look at ourselves as the founders of the modern digital mortgage, right? Our inspiration was the trigger point for us was when we saw Mint.com. If you remember that story,
yeah, of course.
Mint.com, guy came in, grew it, sold it, did a really great job at it. But from that, we realized that the data was out there. Why were we asking consumers to fax in bank statements? You can keep your credentials and suck them in. So then we started asking, so what else is out there? Is there REO data? Is there employment data? Is there income data, right? We started searching and searching. We started finding those pieces. And the trick for us was really kind of put those pieces together. And so that was 2007. We did the business plan. Couldn't raise the money to get it off the ground, so we kept the dream alive. And then we were able to get it off the ground and go to market in 2016.
So, and it's interesting. I feel silly that we're even talking about actually, waiting for decisions, anything more than microseconds. Because the data is already out there. We already know how much actually money you have in the bank, what your assets are, what your the property value is based on the recent sales. That information is out there. Your income is already actually it's already in there actually, but by just looking at your assets, you can see how much money is flowing in and out. You don't even need to bother actually with tax forms or verification of employment. So why are we still actually celebrating when we can close a loan in 2 weeks?
Wow, that's a great question. No matter how much technology is out there right now, the process is still pretty darn manual, right? We're not sitting there scrounging through stacks and stacks of paper anymore, but we're still scrounging through now tons and tons of PDF scans and images and hunting for data on the screen and mapping the data and verifying the data, right? That still exists. I think the next evolution for us needs to be the automation of the big data that we get, the automation of the critical processes, putting in the right hands at the right time so that we can unlock true automation efficiencies in the space. Right? A loan officer, for example, they got a product and pricing engine. They can run hundreds of products across multiple investors. And with that data, they can have an intelligent conversation with the borrower and help them choose the right product and rate to get into. But you still got to search for it. You still got to comb through it. You still got to think through it. You got to open up every file to see what difference between this investor and that investor. Well, sir, this one might be better for you because we only need 12 months of bank statements versus 24, for example, right? So I think we got to start automating that. And it's not about automating the loan officer's role. It's about automating those functions. So loan officers could be more of a consultant. They could be a guide. They could be an advisor to the transaction. Let the transaction work the way it works. We need the loan officers, and we always will need the loan officers so they can think through it and help guide the consumers to make the right decision for their lives and work through the intricacies of guidelines from this investor to that investor, for example, and this product to that product.
Interesting. So then you said something there. We'll always need the loan officer. Do you think there'll ever be a point where there'll be an AI bot that will be able to pick up my, shrugging the shoulders, even though my words are saying something different? I mean, do you think there'll ever be at a point where, where there'll be less of a need for a loan officer because technology will just be able to kind of fill some of the human functions that right now loan officers do really well?
Well, to answer that question, let me take a step back.
Yeah.
I think, can AI replace humans? I don't know, but based on what I've seen, there's a strong chance it could. It can outthink us, it can beat us at the game of, I think now they can even beat us at the game of Go, which is the most complicated board game out there, right? I mean, they're outthinking us in chess. They're outthinking us in poker.
Yeah.
They're outthinking us, the stock traders on Wall Street with, the micro trades. Yeah. So can AI get there? Yes. Then the question is, can that actually eliminate loan officers? Well, if it can eliminate all those other functions, it probably could. But the question is, should it? Right? Yeah. And I don't think it should.
Yeah, I agree with you 100%. I think actually, listen, I think actually, and I forget this, they say actually, I think we have another like 15 years before, the AI is as smart as us for general intelligence. And then another 20 years after that, where it'll be smarter than us for general intelligence. And then, that's when maybe we have to worry about who has that first. But right now, we could have actually fun using these tools to make sure actually that the originators could do what they're really good at. Because the best originators, I always say, are good at two things. And one of them actually is sitting with borrowers, understanding their needs, understanding the things that they're saying, hearing actually them talk about, their situation, and just explaining their options. And number two, setting up actually the opportunities to bring in more deals like that, whether it's through realtors, through referral partners, and other referral sources. Tools like what you have allows actually the originator to never have to chase page 8 of 8 that was left intentionally blank.
Mm-hmm.
So now tell me actually, from an organization size, BeSmartee, who is it catered to? Is it catered to large organizations, small organizations? Like when you guys created this, did you have actually, were you envisioning like the Quickens and Wells Fargo being your customers, or was it, Jane's Mortgage Broker on Main Street?
When we first started BeSmartee again, right? We started development of the product in 2014. Mm-hmm. And yes, we wanted the biggest brands, the Wells, the Chases, the Citibanks, right? The BBVAs, HSBCs of the world. But those aren't very easy to get into. nor were they ready to adopt such a type of technology. Some that aren't even ready to adopt that type of automation today. Amazing. Right? 6 years later. So we quickly realized that we had to go back to our roots, and where our roots were the broker space and the smaller mid-tier non-banks. So that's where we went back to. We had those relationships. We had, a way to get to them. We knew their lingo. We built businesses with them. We worked with them for years, and that's where we decided to build our book of business. Now, today, right, we do cater a couple international banks with $2 trillion in assets and greater. We do work with some of the largest lenders in the country, but our bread and butter still are the smaller to mid-tier banks and non-banks that are doing anywhere from 100 to 300, 400 loans a month.
That's great. And listen, I mean, and the idea is that they're the ones on the street. They're the ones actually that have the personal connections, the interactions, and then just now they have great technology to help support them. So, all right. So we started this actually, this series, because of a reaction to COVID-19. We saw actually, the industry was like, what are we going to do? How are we going to react to this? So, I mean, obviously, you have a solution that addresses a lot of the problems. Talk to us, about, when COVID-19 happened, what was going through your mind, and how have you adjusted your business to accommodate the, I'm assuming, increased demand?
Yeah, so demand is crazy. Everyone knows we're in a low interest rate environment. The intake of applications is just ridiculous. We saw month over month spikes of 100% in some cases, right? When as soon as March hit, it month over month went up 100%. I think it was 115 or so percent to be exact. Wow. And it dipped really quickly because of COVID, and then it's just climbing back up again. We're starting to see those exact same numbers. How have we changed? Well, first we had to take a look at our organization. We were moving to a work from home posture anyways. Really? This helped expedite it. Our infrastructure people were busy at the last moment, hardening laptops and make sure all that's good for, employees to take home. But beyond that, we were pretty ready for it. And, for BeSmartee ourselves and, the way we operate, we actually feel like we were operating better than ever. The tools are out there, the Slack and the emails and the go-to-meetings. A lot of people are using Zoom, what we're doing here. There's ways we can do it. So I don't think we're ever going to come back. We will open up the office when we're allowed, when it's safe, and allow those people that want to work in the office the chance to work in the office so they can still be a team. But otherwise, we're going to be a work-from-home posture moving forward. In terms of our product line, it definitely is forcing us to rethink our roadmap a little bit. We didn't think e-closings and that whole back end part of it was going to come in that quick. Well, it's coming on quick. So now we're making adjustments to our roadmap, but it's also opening up other opportunities to make adjustments to our products so that we can continue this work from home posture, this efficiency that lenders are getting across the country. Thirdly, the way we approach the marketplace. While the coronavirus is a bad thing, I wish it never happened. For us, it's actually been kind of a good thing, at least from a business sense. Okay, the last time we had an inflection point that said, "Hey, this is the way and where the market's heading," was Rocket Mortgage. Right? They launched, I think, towards the end of 2015, officially, right? And they did the big Super Bowl ad in 2016. We launched right in January 16th, so we're right there. That was the first big inflection point. Then it kind of fizzled. POS was hot stuff for a while, and it kind of fizzled out a little bit. And now, gaining momentum again, especially with the e-closing component added to it. So this is now the second inflection point where I think people are seeing look, great idea in 2016, required now moving forward. Yeah.
So, and as far as funding, when did actually, you start to get funding? Did that Super Bowl commercial help you get funding? Was that something like that? Because I gotta imagine, that's a big commercial to say, actually, everyone, it's time to digitize.
Yeah, I mean, we were pretty fortunate when we went live in 2016. We immediately had lenders ready to work the system. We thought we were ready. Once we got in the hands of the users and we started putting files through it, we realized pretty quickly we had some more work to do. We worked really hard in 2016, And towards the third quarter of 2016, the first live loans started flooding in. So that volume started coming in a little bit later. We had to get people through implementation. There was a lot of things we didn't know, right? I think you see this with a lot of new entrants in mortgages.
Yeah.
And all the money in the world, all the biggest team in the world is not going to do much if you don't know the business, if you don't know the players, if you don't know the intricacies of it. For example, right, one thing that I remember sitting in the lender's office in San Diego here, like, well, Tim, we need to be able to restrict loan officers to not edit this field under these conditions. Never thought about it, right? That was one of many, many things we didn't think about. But because we listened, we learned, we did better, and we built those products, built those features in for our clients.
Interesting. So, and then now, would you say actually that other POS providers don't do that? Like, are they, here it is, off the shelf. If it's good for everyone, it's good for you.
There's definitely out of the shelf, off the shelf POSs that you can pick up.
Yeah.
And I think they work fine, right? If you just want a POS, if a certain percentage of your business is consumer direct or online applications, and the vast majority is traditional retail where the relationship, kitchen table type of offering is being handled, fantastic. Check the box off and move on to a different objective that provides you more value. But where we excel, and we get excited working with our clients who want a true digital transformation. Taking a 1003 online, not good enough. They want to take the 1003, automate credit, extract the credit, put intelligence behind it, automate the VOE, the VUI of the work number, right? They want to automate this, they want to automate that. They want to put the loan in a certain state where the loan officer can then have a conversation with the borrower and guide them to the right choice, walk them through like a consultant, like an advisor, as opposed to a, someone trying to sell a product. Software did the selling, they already did the processing. Now let's use their expertise in there to help them go into this product, into this mortgage process the right way and get them out of that process quickly.
Interesting. So I mean, let's dig a little bit into the mortgage process. And let's, Tim, let's pretend actually though that you have the ability to change the entire mortgage process. Your data sources. Like, what would be the quickest way to get from a I want to buy a home or I want to refinance to closing? So your data sources. How fast can that really happen? Putting aside actually, the fact actually that we have filings, we have regulations, we have waiting periods, we have all these other things that need to happen. We've got title insurance that needs to come in, which is a whole nother thing. I mean, really, it just basically says we're crappy at record keeping. So let re-engineer the mortgage process, like you re-engineer the appraisal business, like you re-engineered the point of sale, and tell us actually, how you see actually, using the data sources that you have today, how you could make a better mortgage process.
Yeah, I was going to ask you that because today versus 5 years from now going to be a completely different animal, I think.
Yeah.
So today, I think we're doing it. Okay. I think we've made it as fast as we could. So you can literally start an application, key in your personal information, agree to the terms of use, privacy policies, e-sign, disclosures, etc. Verify your identity, automate credit, automate the work number, automate the verification of assets, set that all in, automate the product and pricing, automate choosing of the product, automate the automated underwriting systems, and present a conditionally approved product choice to the consumer in about 10, 15 minutes. We're doing that today. That's possible today. Then from there, what we're also doing, right, is then you can choose that product, lock it or float it, generate disclosures, lights out, and sign that disclosure and pay for your appraisal in the next 5 to 10 minutes, depending on how long you read those disclosure stacks. So that's all possible today, but I still believe that's too long, right?
Yeah, so it is. It should. I mean, like anything greater than a few milliseconds is long because the data's out there already.
Exactly. I think we can cut that down to maybe 20% of what it was. Yeah. What I just explained. So that 20, 25-minute process, I think they can go down to say maybe 7 minutes. So if we can gain access to that data quickly, right? I think the portion here is identity verifications can be a big topic, right? In this day and age that we live in. We got to find a way to verify consumers' identity quickly, because the sooner you can verify that I know I'm working with you, I can pull those data sources in. Then we got to make sense of that data, massage that data so it's structured properly for a mortgage, right? That's the only way you can get it to pass DU and LPA, for example. Then that pricing will come back. Then we got to get more intelligent at helping the consumer zoom in on the right product for their situation. Hey, here's a big list of products. Here's a short list of products, whatever. Consumers don't deal with this every day.
No.
I referred my uncle to one of our clients, and he's sophisticated. He's a doctor, owns multiple properties, very well educated. He was struggling with the products and price. He just didn't understand it. He didn't understand why things were more expensive up here, but better rates, and why is it, why am I in a worse way, if I spend less money. It didn't click, right? So automating that decision process is something, or helping, I should say, provide those recommendations in a very intelligent way is really important. And if you look at other industries, people are still struggling with that. Whether it's Netflix trying to recommend the best next movie you should watch or the best show, or Amazon trying to recommend the next best product, it's difficult, right? Because you're trying to read into people's minds, and that's not the easiest thing in the world to do, if it's even possible. But then if you can get through those things, I think you can get to that initial disclosures in about 5 to 7 minutes, okay? Then the rest of the process, right? So we look at digital mortgages in 3 components. Component number 1, the POS, got to have it. All right, great. Component number 2, and that's where, that's where basically the buck stops for most, for the industry. Is 1003, maybe automate credit, done. Pass it over to the loan officer. Where we've excelled is we focus on the second tier, second phase, which is automating that data, automating the critical core processes. And that's where we continue to focus. And where we got to move to, because of COVID now, right, is the e-closing. So that third phase of the e-notes, the e-closing, the e-vaults, everything, we want to kind of just bring that together. So if we do this again in 3 to 4 months, I'll have a little bit more information about the third phase of that. But that's something we're looking into very closely. What I think people are doing now is a great first step, but it could be much more seamless, much more automated, and that's what we're going to be tackling in early 2021.
That's fantastic. But by the way, I think we have our poll quote for this: the 7-minute mortgage, the road to the 7-minute mortgage. I mean, that's it right there. I think. I mean, but yeah, and you're right. I think it should be happening that way. I mean, we have some hurdles to deal with it now. I mean, do you think actually blockchain will have a significant impact on our industry?
I'm gonna claim ignorance on this. I don't know enough about it. At this point, I can say we're not pursuing it.
Yeah.
I love the transparency that blockchain provides.
Yeah.
But at the end of the day, it's just data being stored in a different way.
Yeah.
And if that way of storing data will help with audits, reviews, data integrity, we're going to be looking into it. So I don't know enough about it today. We've made a decision not to pursue it yet, but it's something we revisit annually to see if we need to put that on our roadmap.
So what's the next technology that we should be paying attention to as mortgage lenders are watching this? People are out there saying, all right, well, okay, so I got my POS. I've got, it's connected to my CRM. I'm running actually a great LOS. My tech stack is on fire. We're doing unbelievable things. What's the next thing that they need to pay attention to?
So 2 things, right? If we look at it from a technology perspective, I think that funnel, understand that online funnel, that digital funnel, is really, really important. Yes, you have CRMs. Yes, you have great aggregators like Bankrate. Yes, you got great technology stacks. I mean, we're still not over the hump of making this technology stack work the way it's supposed to work. Mm-hmm. Right? I really feel like this year and next year, it's going to be mostly a nuts and bolts type of year, where we're just getting that and perfecting the data exchanges between the LS, the POS, the CRM, the doc provider, right? Just getting that all really honed in a very scalable way. Now, meanwhile, though, I think that top of funnel conversion, how do things come in? Where are they coming in from? How do they behave, at midnight, sitting on their couch? Right? You don't have that luxury of talking to someone, shaking their hands, being on the phone with them, and filling them out, and using your human instincts to make the deal happen and help your consumer, right? So that then leads into the behavior part. I think that lenders need to focus in on is the skill sets that got you here are not going to get you there, right? The way you've been selling for the last 20 years has worked phenomenally, and you probably could keep on doing that and have a great career. But if you want to knock it out of the park, you want to really lead that next charge, I think lenders have to look at changing, now I would say changing, enhancing their understanding of the way consumers behave online, the funnels, the different entry points, how they navigate pages, and really obsess about how they're behaving on the POS, how do they behave after they get an approval, right? And really understanding and communicating the right time at the right place.
So Tim, can you some of us understand what a tunnel is, but explain to us actually, what you see actually a typical mortgage lender's tunnel that looks like from the point of actually first point of interest to where they're being marketed to after their loan closes. So talk to us about the funnel process that you see with a typical lender.
I used to think I know this answer, but the more I get to know lenders are all across the country, different models, different strategies. I'm learning more every single day. But typically, right, if you look at traditional retail, it starts with the relationship, however you get it, whether there's a realtor, through a friend, through the dad's buddy at the country club, whatever it may be. You start with that relationship. You understand the consumer, right? You're qualifying them. Right, you're checking off your boxes like any good salesperson would. What's the event that's causing this? Why is there a need? Why me? What are you really looking for? What's in your horizon? What other objectives do you have in your life, right? So you're going through that basic checklist that any loan officer would go through to understand the consumer. Then, undoubtedly the next question is, well, what's out there? What can I qualify for? Can I even qualify? How much can I qualify for? And the PP has done a great job of allowing loan officers to stick in scenarios, right? I think that could definitely be enhanced a little bit to more directly answer some of these questions that are much more common, right? How much home can I get? Well, a lot of times, right, you have to key in a loan amount. Oh, that worked. Let's up the loan amount. Let's see how much more loan you can get. It'd be much easier if we could work in reverse, right? If you can put your desire, it'll figure out if you can get there. And if it can, it should say, well, you can if you do X, Y, and Z.
Right.
But anyhow, I'm deviating a little bit. So that's the funnel. Then you take the application, and I've seen great traditional retail loan officers take it in very creative ways. You don't even feel like you're being asked, but you are, right? They're just having a conversation. They're collecting data. They're keying into their LOS. Our customers, hopefully they're keying into our POS, where they can then deliver a digital dashboard to the consumer thereafter if they choose to do it all by themselves. But anyway, so they take the app and they run through credit. It depends on the institution, but they'll run through credit and see if they qualify and issue those 3-day disclosures and move on with the process.
Interesting. Okay. So, and then does it end there, or does do you see that like a funnel just continues? Like do you actually? And I realize you're hyper focused on the point of sale, and then it's beyond just the point of sale of gathering everything. But do you see actually ever BeSmartee being able to go beyond actually the close? I mean, is there anything that you guys, because you have access to data, and that data could be used actually to say, hey, listen, that person's credit score has gone up. So, there might be a good chance, because between that and the property values actually, have gone up, this might be a good chance to look at actually for another refi opportunity. Yeah,
absolutely. So, to fully answer your question earlier, right? So the funnel really is just the journey of the customer, whether traditional retail, consumer direct, or in this case, online, digital, right? It's just a path that they go down, and the pathways are a little bit different, but the nuts and bolts are all the same, right? Can a mortgage POS extend beyond the closing of the mortgage and the funding of the mortgage? Absolutely, I think so. Because I think if your consumer trusts you with the largest transaction in their life for most people, right? You have all this wealth of data and trust, you need to untap. Yeah. Even something as simple as, look, I know the year of your home. We know the roof is going to start, you're going to start having to save for a roof in 10 years. Mm-hmm. Let's start helping them get there. Give them a way to get back into your brand. Let's start saving the pennies for the water heater. Let's start saving the pennies for the roof. Hey, real estate taxes are due. Gosh, even just a little simple reminder on my calendar would be phenomenal. I always forget. Luckily, my wife takes care of it, right? But I wish I had that reminder. I don't think about putting on my Google, calendar.
Yeah.
Once I close on my mortgage, I wish it just appeared on my calendar. Keep me out of trouble. Help me be a good homeowner.
Oh, that's great. That's fantastic. So it's great. So it's on your mind. You realize actually that's a great opportunity. And listen, independent originators are not great at that retention. We know Quicken actually is masterful at retaining their borrowers. If you get a loan with Quicken, chances are you're going to get another loan with Quicken because they're so good at actually, making sure that you never leave them. But the independent originators, they just suck at it. They really, obviously, there's plenty of people that do it good. But so where do you think they fall off?
It's the model that we work in, right? Is you got to close a deal by a certain time of the month to get paid and take care of your family. So we have to keep on looking at the next deal. Hopefully, though, that there's other people in the organization who can look out 3, 5, 7 years out, and figure out ways to get these clients back to the same originator, right? So you can't blame the originators because I got to get the next deal because I don't get paid if I don't close the deal.
Yeah,
but you need support. You need vendors, or you need someone else in the organization that can look out longer and start developing those tools and bringing those customers, put them in a state, right, where your brand's constantly in front of them, so we can bring them back into the situation when needed.
Fantastic. So, listen, Tim, always great to spend time with you. I really, really appreciate this. It's a great time to reevaluate your tech stack. We have actually an Originator Tech Day, coming up actually on July 21st. Got unbelievable companies. We hope you're going to join us for it. We're going to be sharing some information next week on the Mortgage Leadership Outlook. Next week we've got Joe Deline, godfather of mortgage technology. This is a guy, actually, it's funny, I was just thinking about this. When people thought the next technology was, going from thermal fax paper to plain fax paper, he was putting actually, pricing and eligibility engines in people's palm, using the Palm Pilot at the time, actually. So very, very excited. It's great to have back-to-back, technology masters such as you and Joe next week. So, Tim, thank you so much for joining us. We really, really appreciate it.
Andrew, thank you. Appreciate it.
All right, everyone. We really, really appreciate it. If you want, you can catch other episodes at the link below. You can catch the past episodes using that link. And if you can, please join us next Wednesday at 4:00 Pacific. 4:00 East Coast time, 1:00 Pacific. Thank you very much, everyone. Stay safe.